Well, good morning, everybody, and happy Monday. I'm about to give you an update on the markets. So, what's happening this week? I'm doing a video this time because a lot is happening this week. There's two very important things. On Wednesday, the Fed meets to make their interest rate policy decision. Yes, it's that time again. They have so far cut three times for a total of 100 basis points. The federal funds rate has gone from 5.375 to 4.375 on average. So 100 basis point drop. We all know what mortgage rates have done. They've gone in response to that. They've gone up. That was a bit of an overreaction. Trump, tariffs, all that stuff was the fear. But of course, as usual, it's an emotional response, overblown. 10-year Treasury shot from 3.6% up to 4.8%, 120 basis point increase, which is ridiculous. It's now settled down to around 4.5% and change. So we are coming back a little bit. And, the Fed, back to this meeting on Wednesday, there's pretty much a 0% chance they're going to cut interest rates. Now, who knows? Maybe they surprise us. But as always, the Fed's language at the press conference and the forward guidance that he provides, Jerome Powell, is going to be the deciding factor in how the markets truly respond to all of this. I'm a little worried, as always. The Fed is old and slow. I have a feeling, as usual, they're going to come off as conservative and hawkish, meaning non-accommodative. And my concern is the market reacts to that, and we see interest rates climb back up again for mortgages. So the decision's 11 a.m. Pacific Standard Time. The press conference on Wednesday is 11:30. If you want to pay attention, just go on CNBC at those times. What else? So this Friday, the Fed's favorite measure of inflation, the PCE, is going to be coming out, and we do expect a slight improvement. We never really know, but my expectation is we're going to see a slight improvement in inflation. So that could, especially if it surprises to the downside in a good way, that could help mortgage rates further. The only other notable thing worth mentioning is why are mortgage rates in the 10-year Treasury today on Monday dropping like they are today, because there was a significant drop. Everyone's responding to the hype of China's, I don't remember what it's called, DeepSeek. It's AI. Their version of AI is apparently much cheaper, much more straightforward, much more feasible. Do I think this is an emotional response as usual from the markets? Of course. Yes, it is. I think it's probably going to be way overblown. And I think, we see the stock market correcting in a big way, especially the NASDAQ, because it's tech stocks. And the fear is NVIDIA is too clunky and expensive and overcomplicated. And China's version is 10% the cost and way more efficient. Now, is there truth to any of this? I don't know. But the reality is, because the stock market's selling off, bonds in the 10-year Treasury are improving. Interest rates are dropping. That's benefiting mortgage rates. So we'll take what we can get. Whether or not this has staying power, I don't think it will. But right now, we sit at a 10-year Treasury of 4.54%. And the average 30-year fixed is in the high 6% range. And that's better than above 7%. So we're heading in the right direction. Stay tuned on Wednesday for the Fed decision. Stay tuned on Friday for the PCE report. We'll keep in the loop. Thanks for listening.